Before we start, I would just like to give you a quick overview of my portfolio, which haven't actually changed from last time. I'm still mostly in cash and my 100 Nordisk stocks. I would also like to show you my charts, which shows you how much money did I earn and how much return did I have compared to S&P 500. Those charts were not 100% correct last time, so I had to change the numbers so they represent true condition. As you can see, I have earned around $550 this year, and on the S&P 500 chart you can see that actual S&P 500 went into negative territory, but my return is above 3%, so I'm quite happy whenever I'm beating S&P 500. So let's move on with today's topics. Dow Jones plunges nearly 1,000 points, gives up gain for the year. Buffett sees economy a little softer, says several Berkshire businesses impacted by the coronavirus. And then another thing, which is several days old, Morgan Stanley raises its bull case on Tesla to $1,200. Hi everybody, I hope you are having a better day than the markets have today. I didn't plan to do a video, but since there are a lot of things happening today, I wanted to give you my point of view of all of these things. As you can see, number of coronavirus cases outside China surged, spreading fears of global economic slowdown from the virus spreading. Up until recently, everybody thought that all of this coronavirus was China's problem, but since last day or two, number of new cases outside China, especially in South Korea and Italy, quadrupled to several hundred cases, to many deaths, and there are several cities in South Korea, in Japan, in Italy that are surrounded with army. Nobody can exit or enter them. You see more and more photos of empty shelves in stores. Food supply chain is disrupted. You can't buy masks. There is overall sense of panic in all of those countries and in the markets. So yeah, consequently, stocks fell, gold went up, bonds went up, yield on the bonds went down. Here you can also see a table with the biggest one-day point drops in the past 3 years of Dow Jones Industrial. At this moment we are 999 points down, which places us on the third place. You can also see Apple, Facebook, MasterCard, Nike all went down about 5% in a single day. Amazon, Google, Microsoft also 5%. Daimler, Disney 5-6%. Berkshire Hathaway 3.5%, AMD, Nvidia 7-8%. So overall, many people lost a big chunk of their investments in single day. But what is even worse, there is a big sense of uncertainty, and everybody hates uncertainty. So if I would tell you that you will lose 5% today and that's it, I think you would be okay with that. You'd say, okay, the worst is over, I can move on, I can make some calculations about my future return and so on. But the problem is nobody knows what is going to happen tomorrow, next week, next month or next year. And that is the biggest issue. As you can see, in Europe, indexes went down even more. They fell around 4%. Oil went down 5.5%. Maybe what's interesting is Shanghai index. It didn't went down at all. The reason is that their president ordered workers to go back to their work, to their factories. Many analysts think that it is only a PR and that main goal of that order is only to calm the markets, to show them that everything is calming down and that the Communist Party is dealing well with the problem. But if you check these charts of daily coal consumption or passenger traffic, you can basically conclude that this is only fake news. Nothing is going on, nobody is going back to their factories, and basically half of the country is shut down. Carnival in Venice in Italy is cancelled. Japanese politicians are hoping that Olympic Games will still happen, so it's really becoming a serious thing. And unfortunately we can only guess how big of the impact will it have on the economy, because there aren't any macro data available for February. They will be available in a few weeks. So the main point is, what can you do to protect your portfolio in times like this? There are several main asset classes for each type of investor, based on your age, based on your investment time horizon, and based on your risk aversion. How much risk and how much volatility can you tolerate? So you can invest in stocks, which gives you on average highest return, but also highest risk and highest volatility. Then you can invest in bonds, which historically went up when stocks went down. But we've seen in last several years that they can follow each other with price growth. And you can, for example, invest in gold, which is mostly known as inflation protection. But gold also can grow in these times of uncertainty. As you can see on gold chart, that in the last 6 months, price of the gold went from $1,450 per ounce to $1,650 per ounce. So that's quite nice return. And if you are older and if you plan to retire soon, I would suggest you to put most of your money into bonds. And if your time horizon for investing is 10, 20, 30 years, like mine is, and your risk aversion isn't low, so you can tolerate some volatility, I think best allocation of your investment should be in stocks. Or you can test several different options and check what best suits you. For example, you can see ETF, which consists from 20 plus year treasury bonds. Today, it went up around 2%. So while we see bloodbath on stock market, TLT ETF went up 2%. You can also see that gold went up almost 2% today. So in these times of uncertainty, when everything is falling down, if you would hold in your portfolio some bonds and some gold, you wouldn't lose 3 or 4% of your money if you would be invested in S&P 500, or you wouldn't lose 5, 6 or 7% of your investment if you would be invested in Apple, Nvidia, Google or Facebook. Of course, in good times when everything is rising up, you would lose some gains or you would miss some gains, but that is the cost of having portfolio with less volatility and with higher margin of safety. You will never be able to protect your investment 100%, no matter in what you invest. You can invest in houses, in real estate investment trust, you can invest in bonds, in stocks, in gold, but what you can do is diversify your investments in several different asset classes. Some of them will rise in good times, some of them will rise in times of uncertainty, but with a portfolio invested in several different asset classes, you won't see big volatility, you won't see big price swings. I personally am at this moment looking only in stocks. I am 30 years old, my time horizon is very long, I will not need this money in my portfolio for at least 5, 10, 15 or maybe 20 years. So I'm focusing at this moment on maximizing my return. But of course you can take into consideration investing in not only stocks, but as I have already said, gold, bonds, commodities, oil, corporate bonds, real estates, whatever suits you best as investor. Okay, let's go on another topic of the day. Before we go on, I would like to clarify. I am not giving you my opinion about Tesla company or Tesla stock. The point of this topic is only to give you my perspective and my opinion about analysts which are giving you their opinion about price of some stock. I personally love Elon Musk. I love when somebody is disrupting traditional and old industry. I love Tesla company and I love everything he's doing. But today, even though we will be talking about Tesla, the point is how you shouldn't care at all about what some analysts are talking about company that you have evaluated and that you have bought. Morgan Stanley raises its bull case on Tesla to $1,200. Why is that so interesting? Well, it's interesting for me personally because, as you can see here, in December, so a few months ago, they raised their bull case for the stock to $500. So in a short span of time, in only 2 months, they said, you know what, we think price of the Tesla stock should be $500. So we evaluate the company to around $80 billion. And only 2 months after that, they said, you know what, now we evaluate company to $1,200. So in total, Tesla company is worth around $200 billion. and everything that in small period of time where actually nothing especially happened around Tesla company. All that happened is basically analysts from Morgan Stanley giving the company high multiples. I think that is not something that professionals should do, and after that kind of prediction, they basically should have lost all of their credibility. The best thing you could do is to do your own homework. You should check what somebody else is talking about your company, because you can always miss something important, but you shouldn't base your own opinion and do your investments based on somebody else's opinion. Especially not on opinion of analyst that boosted his price target to over double in span of around 2 months. Okay, have a nice day. Thank you for watching my another video, and I will see you in next video. If you have any questions, if you have any comments about my videos, please let me know in comments below. Bye.